Good morning, everyone, or let me rephrase that. Good afternoon, everyone. Thank you very much for joining me. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM, and welcome to the NFP Live Trade. Today is the 6th of October, and it's just gone 20 past 12 GMT. And just draw your attention to my email address, which is rshaw@fxcm.com. And what I'd like to do, just go ahead, bring up some of our disclaimers. We'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Good afternoon, Raj. Kim, pleasure to have you on the webinar. Thank you everyone for signing in today. And let's just take a look at the market commentaries disclaimer. I'll keep this on screen for a few moments as well. Hey, Indran, good afternoon to you. Welcome. All right, and just our references, Market Scope, we'll do the trading on Market Scope. And we may look at Trading View. I may reference the 10-year or the 2-year yield. This is a Trading View. In terms of the Market Scope template, most of our time will be spent on 1-minute chart. Is just a candlestick chart, and then we've got a stochastic underneath that. And the stochastic is just our standard 15.55. It's actually a 15.5. We don't have the percent D in. And we've also got a 15-minute and a 1 hour, which we may consult as well. This is a live trade on a demo account. The demo account has about $20,000 in it, and we'll be trading Euro US dollar. You can see here it says demo, and sorry. And what we'll do is we're going to put 1% of the equity at risk. So we'll put $200 effectively at risk. And the way that we'll do that is with a tool on Market Scope. And what I'm going to do is show you, if I right click and I say market order, let's just say we're going to buy, just click advanced here, and we're going to use a stop and a limit of 20 pips. Okay, so what we'll do is at the bottom here, you've got a little check mark that says in pips, just check that, and the limit will be 20 and the stop loss will be minus 20, right? And then what you can see is if we take a look and let's just say we put in a 100 amount, the stop loss says we are risking 212. That's a little bit too much. 200 is our limit, so maybe we'll go down to say 95. Still a little bit too. Let's go sort of 90. Yeah, we're about right there. Maybe sort of 91. And you can see that it's telling us how much we're at risk. So that's the mechanism that we'll use to effectively control our losses if we have any, and control our profits if we have any. In terms of how we're going to do this, we're going to let the news come out. There's either going to be an impulse to the upside or there's going to be an impulse to the downside. We're not going to be trading that. We're going to wait for the correction. So if the impulse is to the upside, we're going to wait for a correction to the downside, and then we're going to try and trade it over here. Okay. If there is an impulse to the downside, then we're going to try and catch the rally and effectively try sort of short into the rally. We've got about 171,000 that is due. I would expect that if it goes south of that, then the euro catches a bid, and if it goes north of that, then the dollar catches a bid. What else do we? The inflation rate or the average hourly earnings is due is expected to be 0.3%. Anything higher than that, potentially telling us that there's still some inflationary pressures there. That could be dollar positive. And unemployment rate is expected to come in at 3.7%. The last one was at 3.8%. So looking to come a bit tighter there. So that's what we're going to be shooting for. We've got another 45 seconds. Just we'll do a stop loss of 20 pips. We'll try trail that up, and we will do a take profit of 20 pips as well. If there's any questions, you can go ahead and type those in. I may go a bit silent during the trade. It's just I'm thinking it's quite pressurizing to do a trade in front of an audience. Hey Howard, nice to have you. Okay, we got another 13, 12, 11, 10 seconds here. Let's go through to our 1 minute chart here, and let's see what happens with the euro US dollar. Okay, it's pending. Let's see what happens here. It's very orderly. There we go. There we go, shooting. So euro getting sold down, US dollar catching a bit, so perhaps a little higher than expected. Wow, okay, so non-farm employment change was expected at 171,000, came in at a mammoth 336,000. So there's no one we're seeing the euro get sold down and me going into the US dollar. Average hourly earnings slightly lower than expected at 0.2%, and the unemployment rate at 3.8%, but that non-farm employment change still suggesting a very tight labor market. Still suggesting a very tight labor market. Let's just take a look at the hourly chart, and it's shooting all the way through to S1. S1 possibly going to come in as some support there, and this looks to be the impulse move, doesn't it? So it's almost as if we are now looking, well, not almost, we are looking for some sort of counter rally, and then we'll see if we can get in on the next impulse. But a very, very strong non-farm employment print. Wow, that's close to double, right? Okay, just waiting for the entry. Let's take a look at what's happening with the rates. Okay, you can see how the yield is shooting up. Yield shooting up on the 10-year. That should be dollar supportive. Let's take a look at the 2-year. Yield shooting up should be dollar supportive. Okay. So now we've just got to see if we can catch. Now we've just got to see if we can catch the rally here. Let's take a look. I'll just change this to green. So there's going to be a strong movement here in the dollar. This is very, very strong print. So we're looking to short, but before we short, we want to catch the rally. All right. This is okay. 1, 2, 2, 3, and we're trying to get it down on the next impulse down. Okay. Euro getting absolutely clubbered at the moment. Just take a look at the stochastic, how the stochastic has moved into that lower quintile, and just telling us that the momentum is strongly to the downside. Okay, so we're just going to see if there's going to be any respite here. At the moment, it's all been euro selling, dollar buying. A little bit of support coming in now, and we've got 17 seconds. We'll get the next candlestick. Still a lot of pressure on that euro. Let's just take a look at the interest rates. It's really shooting up. Okay. So the Fed's going to be concerned that the job market is just too tight, just too tight. A little bit of support coming in now. Okay, so here's a potential reference candle. So when we look at the reference candles, this is the pattern that we need for our entry. So we need the middle. We need the middle candle to have the highest high, and then we're going to be looking for the candle to the right of that to close below the reference candle's low. So that's the entry signal we're looking for. Got another 9 seconds here. Of 12. Okay, so this is the new reference candle. So we're just going to trail this up. Going to try try time that that rally in. So you can see here is the correction that started, right? Go back to our model. Okay, so 1, 2. Okay, so that's what we're looking for. 1, 2. Another 10 seconds, we'll get the next candlestick. Just waiting for that opportunity. Another 20 seconds, we might get the signal to go short. Needs to close below the reference candle's low. All right, let's go in to the short. So we'll make a market order here. Gonna go to the sell. Let's put in 93,000. 20, 20. Okay. All right, let's see if that's 20 pips to the top side, 20 pips to the downside, and we'll try, we're really going to try and trail that stop down. So if we do get stopped out, hopefully we can get out for less than 20 pips. Here's the resistance. Gee, that's moving really antithetical to the position. Let's just keep an eye on it. A little bit of selling pressure coming in there. Another 7 seconds, we'll get the next candlestick. Here's the resistance. I'd like to get that stochastic back under 20. That will go a long way, making me more comfortable. The reference candle, here's a new reference candle over here. So you can use the reference candle is always going to change, but for our purposes, this is the one that we use to get in. Okay, but you can see this is the next level of resistance. So the answer to your question, Kim, is yes. Okay, now we've got, this is a tough trade. It looks like we've got some sort of range that's opening here as the support. So if we can start getting past that support, and if this resistance holds, we can start moving the stop loss down. Okay, so the support here is being steadfast. We've now approached the resistance. Let's see what happens here. And we're just moving in a tight range. Okay, we're at support. Let's just see if the sellers have the fortitude here to push through. And now what I'm hoping for is that we get an impulse like that. So that's the idea. Okay, there's a bit of selling pressure, but it's right on that support, battling to break through. There we go. It's just, okay, there we go. At the support still holding, 10 seconds, we get the next candle. So here would be another reference candle. Can you see that? Here would be the next reference candle, Kim. It would be the lower peak, the next lower peak. Okay, we just, the support level here holding. Okay. If we can just get this pushed down, I'm gonna, in the next 45 seconds, if we can get some more movement down, I'll start pulling the stop loss down. Okay. Nice to see the stochastic moving back into 20. Another 21 seconds, 20 seconds. Next candle in the next 17 seconds. All right, let's get this down just by this resistance area, just above that resistance area. Okay, so now we've taken a substantial amount of risk off. Remember, we had 20 pips risk. We're now down to about 10. So we've taken 10 pips of risk off there. Okay, so here's the next support area coming in. So now there's a real tug of war going on. Nice. Okay, now we just want to take this out, and they're going to move the. Oh, there was a good impulse. 23 seconds, get the next candle. Looks like we're going to get a buying tail here. That's not so good. So this support still holding up. Oh, I don't like the look of that candle. Another 3 seconds. Okay, there we're having another crack at the support. That support level holding up. If we can get past it, we can move the stop down. We'll put it through the break even, so at least we guaranteed some profit. But we just want to get this. Look at that support. So there's some buyers here. So the 105 level, not surprising, is the support. If we go to the, ooh, look at that. I think we got to tighten up here, guys. The support level here is making me a bit nervous. Okay, here's the next candle. I'm going to just drop this a little bit more because the support level seems to be quite strong. So here is the impulse move. See, that's, go back to our, see, that was our model. Okay. But look at this support, really very strong. All right, we're getting pretty close. Okay, I'm moving this to break even now. Oh, we're getting pretty close. I'm moving this even further down. I want to trap in some profit here. Okay. All right, so we're guaranteed a profit here of 6 pips, roughly. You could use moving averages, Kim, if you wanted to ride out the trend. Yeah, you could. All right, this is very close. We're 16, very close out of 20. Look at that stochastic. Oh, that's nice. Stochastic, nasty in that low quintile. Should hit. Should hit. I'm going to trap in some more profit. Ah, there we go. There we go. We got it. All right, we got it. There's a 20. Okay, so the trade was closed on the take profit, so we hit it nicely. All right, guys. Thank you very much, Indran. Thank you, Raj. All right, guys. Let's wrap up there. If there's any questions just before we sign off, just go ahead and type this in. Any questions? All right. Let us go. Let's wrap up here. All right, guys. Before I wrap up, I just want to wish you all a great weekend. We shall chat Monday morning. All right, guys. Have a great weekend. Cheers.